In terms of, Zillow and Realtor.com, and their valuation, I'm setting you up for
Zestimates.
the Zestimates. Why do you think they're so off?
It's the same when we run comps to list a property. We look at what has sold and what is the neighbor. It's all within a certain range. And if you're trying to compare your home here to a home in Tampa, not the same. I love when people tell me like what their house is worth in Illinois.
Oh, yeah, okay. Yeah. Well, that's always an extreme.
Yeah.
Welcome to Money Market, a Bank of Tampa podcast. We highlight the businesses, expert business advice, the local economy, and points of interest in the Tampa Bay market. Follow us on YouTube, Spotify, Apple, and wherever you find your favorite podcast. And make sure you like, follow, subscribe, and share this episode with a friend or a colleague. I am your host, Owen LaFave, the Pinellas County Market President for the Bank of Tampa, Tampa Bay's oldest and largest community bank. Today's guest is Julie Larsen, a trusted real estate professional with over a decade of experience. Consistently a top producer, Julie is ranked in the top 1.5% of agents nationwide and is known for her personalized approach, deep market knowledge, and commitment to delivering exceptional results, which is why we're having her on Money Market today. She's based in St. Pete, although originally from Iowa, and recently joined Michael Saunders. First, I want to welcome you. I'm going to switch it up a little bit for our guests because I had tried to get a realtor to come on to have a conversation about what's going on in Pinellas County. What does recovery look like? What does the condo market look like? And I virtually didn't have any takers. So, Julie, thank you for coming on and welcome to Money Market.
Thanks for having me.
So I guess I need to start with, why did you get into real estate? What drew you in? Why did you want to be a realtor?
Sure. So pretty simple. I had bought homes before in Iowa and came to Florida, tried to buy a house. Terrible experience.
So the experience. Okay.
Yeah, terrible experience. I was not working when I moved here and just knew I could do it better.
So you recently changed firms.
I did.
So when we first started talking, you were with Corcoran. Now you're with Michael Saunders.
Correct.
So tell me about that transition. Why'd you make the move?
Michael Saunders is new to St. Pete, and they're going to be in Tampa as well. They had been...
They're big in Sarasota?
Huge in Sarasota.
Yeah.
Yes, they're the number one brokerage in Sarasota.
I feel like they own Sarasota.
They own Sarasota. Yeah. You can't go anywhere without seeing a sign. And she's done such an amazing job developing that area and building the luxury market there. So they have the project at 400 Central. So they've been doing that since pre-construction. And
for those at 400 Central in St. Petersburg.
St. Petersburg, yes. Tallest building in St. Pete. It's going to be amazing. We will have an office there. And they had been asking her to expand her footprint up here. So she's made the move.
Okay. And so your background focusing in luxury real estate, that in Pinellas specific, that seems to all make sense. Are you going to be at 400 Central?
I will.
Okay. You'll be a neighbor of mine. I'm at 200 Central.
Oh, nice.
Yes. So welcome. How would you describe the Pinellas market right now?
I would say we're still recovering, but it is starting to level out. When you look at stats, it's hard to say that's accurate because we still have so many flood damaged homes. We have so many properties that are still sitting there that haven't sold. But the homes that are move-in ready in flood zone X are still very desirable and that are moving much faster. So when you see the stats on days on market, prices, it's hard to get a really accurate gauge of that just because of how skewed it is still with hurricane recovery.
No, I'm glad you said that because, I'm not living in it every day, but I'm having conversations being in banking. And of course, we do mortgages and home equity loans. So looking at what's coming out of Tampa Bay Realtors Association and seeing those numbers and then having conversations with people, it's like, okay, there is some sort of disconnect here. Just kind of compare and contrasting inventory, pricing, days on market. How do you see like Pinellas diverging from, overall Tampa Bay?
It's hard because again, it's super local. So it's zip code specific, neighborhood specific as to what is moving. The buyers, 100%. There are definitely people out there that are still looking for a deal. There's a lot of, the investors were the first group to come in and kind of take over. People were giving properties away. If you look,
so that was real. People are like, okay, I'm done.
Real.
I don't want to deal with it.
That was real.
Okay.
Yeah. I mean, you couldn't get lands, for example, in Snell Isle. You couldn't find a lot to build on pre-hurricane for under $1 million. And you're getting these homes that were one, I sold one, for example, pre-flood worth 1.5. They let it go for 850. And that's, land value essentially, but the home was definitely repairable. It was not deemed SD, so they could put $300,000 into it and get it back to its glory.
One came across my desk, and I was kind of astonished. Not flood related or flood damaged, still going at a pretty substantial discount. And I'm started probing, and it's just to your point. I mean, the sellers just don't want to deal with another one. We got lucky this time. I'm out.
Had a good year this year.
Yes. So one of the other things that also surprised me was short acres. Talk about people just desperate and like dumping properties. And that's one area I remember at one point in time I pulled up on, I forget if it was, Realtor or Zillow, but I mean, it seemed like 50% of the homes were for sale. Investors are buying those, not building up, just renovating, leasing. Can't get a mortgage. So they're just looking at it and saying, okay, I got a cash on cash return that's somewhere in between like 12 to 15%. That's pretty good. Was a little disappointed that we're not going to see a major transformational change in that area.
Yeah, I think everybody is. It would have been nice to have the city come in and make some significant improvements. I do think there's a lot of discussion around the ability to fix, elevate, or tear down, obviously. What is the right move? In short acres, it's unfortunate that a lot of those homes are best suited because they will flood again.
Yes. Well, I mean, even without a major hurricane.
Even without a major hurricane.
It was like the third time in 2 years. So, definitely prone to flooding, and it's a problem for the city. Now, overall, depending on what source you look at, values are down 2 to 7% on average. And I think it's probably somewhere in that range. There's a little bit of softness in the market, very dependent on zip code. I get it. Are you seeing more people sitting on the sidelines waiting for?
Absolutely. Okay. I mean, and given the amount of inventory right now, it's funny. I mean, we haven't seen a market like this since 2015, 16, where buyers really have all these options and they're in control. Whereas before it was, during COVID pricing, it was
insanity.
If you didn't, lines around the house the day that they would go on the market, and you had to make a decision right then. Whereas now it's like, okay, let's go to open houses. Let's take our time, which is nice from a buyer standpoint, that you have a lot more flexibility and control over what you're getting in that sale.
Well, and as a realtor, you've got to work now, right? So which is good, because I remember at one point, and this kind of goes back to after COVID days, I saw a stat that there was as many listings as there were realtors in the state of Florida. So like everybody has a cousin and aunt.
Everybody.
Yes.
Yeah. It's still the case, I'm sure, but it has gone down. They've weeded out a little bit.
So listing price versus selling price, is there still a pretty good big ask gap?
Not really. We're at like a 95%.
Okay.
But again, that's on average. So things that are overpriced from the start are sitting, and you'll see them just continually taking price reductions. Okay. So, I mean, strategy from the start is to be competitive.
Now, what about insurance credits and buy downs and those type of things?
There is buy downs. I don't see a lot of insurance credits at all. I mean, flood insurance is huge if it's transferable. And most people have gotten their renewals. So people were fearful of what's it going to look like next year?
Sure.
Was there going to be a big jump? Is it going to price me out? And I haven't seen that.
Okay.
Yeah. So
I mean, we're hearing, and maybe this is a good opportunity to kind of transition into some of the legislative changes. But there has been some legislative changes, as regarding insurance in general. Are you seeing that being less of a factor when people are purchasing homes?
Again, two different markets: condo, single family. Single family hasn't been an issue.
Okay.
Older homes.
I'm hearing stories of premiums coming down.
Premiums are coming down. It's nice. And there was some tax relief too. So we have seen some property taxes coming down as well. But condos, different story. So the legislation really hit those hard. There was some relief for it this year. Rolled things back, gave people a little bit more time, gave them a little more flexibility. Whereas when it first hit in 2022, it was assessments. I mean, I know a lot of buildings that owners were $100,000 assessment. Wow. And if you're on a fixed income and that was your home, you don't have another option but to sell.
So, and then as well as getting financing for those acquisitions. I mean, so what happened to the values in those properties that were impacted?
They have just tanked. Yeah. And unfortunately, the dialogue behind it has hurt the buildings that were not in bad shape too. So it really affected the entire condo market blanketed rather than the buildings that needed. We don't want another Surfside. So
no, there is a lot of older inventory.
Absolutely.
So, were you seeing investors come in and buy those units that were?
No. They're just honestly sitting. There hasn't been a lot of turnover. You can pull up, condo stats on what is moving, and it's just not moving. So that's really stagnant. Again, in the buildings that are older, waterfront. Are they leading to foreclosures at this point with the association moving forward? Not yet. We haven't really seen any.
I've not seen that in the numbers.
I haven't seen it in the numbers yet. I thought it would be inevitable. I thought developers would come in, buy everybody out, the building would be gone, build new, build safer.
Yes.
And we haven't seen that yet.
Do you think it's just because we're early innings and we'll eventually get there?
They extended us through this year for people to finish their milestones and make those decisions. I still think that it will probably happen in some buildings just because of a lot of them have the aging population in there. Obviously it's retiree. This is where they thought, this is their last home. This was their last home and they were on a fixed income and that significantly changed.
No, it's really sad. And interesting enough, it may be because everything was pushed back with some of the relief and legislation. We had a number of condos associations approach us about getting a loan and doing some of the, required structural work that needed to be done. And I'm going to throw out a broad number. This number's probably wrong. Maybe we saw 30. I think we've done 2 or 3.
Okay.
So they just haven't come back after they came to us initially. And I don't know if they're getting financing elsewhere or if it's just sitting in limbo and they're trying to figure out what's the best path forward. But haven't seen a lot of it. Are you seeing a lot of those associations actually move forward and do some of those repairs?
It's a discussion. So,
okay.
That's where now
they're still trying to figure it out.
They're still trying to figure it out. They're trying to work those numbers and obviously do what's best for the residents.
Okay.
But that was part of the new legislation was that they're allowed to get financing. Before they weren't. So that was a big relief that the state did give them those options.
Oh, we needed it. Yeah. Talking about supplies, you were talking about, it's maybe a little bit more of a buyer's market. Inventory is at now 4 months. 4 to 6 months is kind of considered healthy. Do you feel we're in a good equilibrium just in terms of the amount of inventory?
Yeah, I do. I think, at any given time, people need to sell and people need to buy.
Yeah.
So it's always
life events.
Like there's things that happen every day. So when people ask, is this a good time to sell? Is this a good time to buy? It always is, in my opinion.
Yeah.
The reality is if you need to sell, you need to sell. Now, if I didn't need to, would I? Probably not. Just depends. I have a lot of clients that are in that kind of flooded property. What do I do? I think rent. I think that's an option that you wouldn't, in normal real estate terms, hear a lot of agents say is the best thing. But if you need to wait for prices to go up, run it out for a year. Let things
do the renovation, rent your home out.
Yeah.
Go find another place to live.
Well, these are investment properties.
Right.
Yeah.
So. So are we talking about investment properties? Or are we talking about homeowners that?
Homeowners don't really have that luxury, but because they can't, they'd have to find somewhere else to go. But yeah, from a second home standpoint, I think the renting is the pathway.
Okay. In terms of what's moving right now, luxury, condos, construction. What are you seeing being, I guess, the more desirable segment of the property today?
Move-in ready.
Okay.
Anything you can do to get your house move-in ready is what people are looking for. They don't want to do the work.
Okay. So someone needs to renovate the kitchen and bathrooms. Mm-hmm. That's going to sit on the market for longer.
The big things, right? The 4 points, the roof, the plumbing, the electric, the AC, all of those big checkpoints. Mm-hmm. If they need some paint, some cosmetic things, people are willing to do that. They like it when it looks good too, but the majors are non-negotiables at this point.
Okay. So that's always one of the things is people are contemplating selling. And, do I design something that I guess you can go neutral enough that anybody may find it attractive, but are you going to design something that then, maybe the broader market won't be of interest? I will tell you, man, I've got one in my neighborhood that I'm still astonished. I mean, it was a beautiful home, but it's got an older tile roof that needs to be replaced, that has like a pink hue to it. And they painted it as an investor that painted the home green. Oh, wow. And just the green. I'm like, well. And by the way, it sat there. And I know paint's fixable. I mean,
it is.
So you're recommending that people do all of those,
Absolutely.
all that work up front.
I mean, at this point with insurance, roofs are just, you have to
can't
get insurance.
Yeah.
So, I mean, it comes back, whether you do it now or it comes back in the inspection, it's coming back.
Okay. What about neighborhoods that are showing some of the strongest fundamentals?
Yeah. Oh gosh, Crescent.
Okay.
These are all in Pinellas. Crescent is amazing. Woodlawn, Magnolia Heights. We're seeing a ton of activity. A lot of builders are going in there. Old Southeast is now popping. Builders kind of had stayed away from that area, and now you're seeing a lot more new construction there. And then, Old Northeast is never changing. That's always going to be super desirable.
And the beaches. So more investors? Is it? I know a lot of those are second homes.
There are a lot of them are second homes, and they're still recovering because they, especially like Treasure Island. It just got wiped out.
Is the permitting process getting any
a little bit
faster?
Better? Yeah. It was really bad at first for people, but I think they've streamlined it as much as they can. But permitting is very important. I've seen many homes that they didn't pull permits and had to go in and rip everything out.
Yes. Well, and that's something I think people just got frustrated and said, what, but yes, then having to go in and tear everything back out. Very sad, but you have to follow the rules, even if it is frustrating. And I only can imagine, the municipalities that were dealing with just the influx. They just weren't prepared for it.
It had never happened before at this scale.
And I get it, everybody's frustrated, but still, there's a process to follow. What about buyer due diligence? We've already talked about flooding. Has that changed as a result of the economy, as a result of, we were talking about, it used to be lines like around the home. How has that changed? I just think
it's always been important, and now it's just highlighted that you have to do, during COVID, people were waiving inspections. Like they just wanted the house so bad. And then you get in and you have a sewer break within the first week, which you just have to do your due diligence. The inspections are the most important thing before you make that commitment.
Absolutely. What about mortgage rates? How are mortgage rates impacting the market?
Obviously, very important. They've been going, since they leveled out, I would say it's less of a problem. Being steady is the best thing that could happen for us. So whether last year they were just up and down, up and down, up and down, people kept thinking they were going to get back down to 4. And that's just not reality. I would like to see them get closer to 6 by the end of the year.
I would love that. I think when we've seen over the last couple of years, when they've dipped down into the high 5s, low 6s, that we've seen an increase in mortgage applications. I would also say, though, it is hard to, because there is something about just the mentality of like, hey, rates have gone up and down, waiting for them to go low. So people sitting on the sidelines. But then also the frustration of entering into a contract and then rates go up. And now all of a sudden it's not affordable and I need to walk away.
Yeah.
So to your point, stability.
Stability, number one. And a lot of, anything pretty much in the luxury market, which I would say is over $1 million, is primarily cash. Like, I don't know how many applications you guys get for jumbo, but
we're mostly jumbo. That's just our clientele base.
Which, yeah. So a lot of what I sell is luxury, and 90% is cash.
Has that changed at all in recent? Because when you look at the stats, again, Tampa Bay Realtors Association, cash buyer seems to be down pretty dramatically. Still a good segment of the population, but
just less buyers.
You're not okay. So you're not seeing it in your space, and
no, if they're cash, they're still cash.
Some of that's interest rate related. How much of that do you think is insurance related?
Because they can self-insure.
Yeah.
I'm honestly, most of my cash buyers still get insurance.
Okay. I was astonished. It seems like it's tapered off pretty substantially, and that is probably correlated with insurance rates stabilizing or maybe coming down. But we had clients that would get their renewal notices. Again, a lot of our clients are affluent. would come in and say like, can I reduce my coverage? Or we're like, no, you have a mortgage.
Yeah.
And you're in a flood zone. So no. And I know they're still required to get flood, but they were like, we're out. We're paying everything off.
Wow.
So just self-insured.
Okay.
And, sadly, there were a couple of those that were impacted by the hurricane. So, I mean, there's risk. I'd like to talk about commissions.
Okay.
That is something, I mean, there was obviously the big lawsuit that resulted in the way commissions are charged being changed. Doesn't seem like there's really any impact to what commissions are being established. Is that a function of this is just the way we've always operated, so we're going to continue to operate in a similar fashion and the market hasn't adjusted? Or tell me a little bit more about that process.
I think the biggest thing with commissions was transparency, whereas the lawsuit came about because someone felt that they were unaware, people felt that they were unaware that they were responsible for the buyer's agent's commission. So now that's laid out from the start. We're not even allowed to show a property to a buyer without them signing a buyer broker agreement that lays out exactly how they're going to be paid, whether it's by the seller or by that buyer. So it's out there. And then with listing agreements, it's the same conversation. Are you paying? Are you not paying? Here's the reasons why we think you should pay. Mm-hmm. And again, I think it is a lot of that because it's the way things were always done. And you're going to be, especially in a market like this where it's a buyer's market, you want to put your best foot forward and not put yourself behind the competitors that are offering that compensation.
Sure. So, I mean, do you think as a function, because here's another thing that is I would question commissions. I get the pushback. I mean, do you think we should work for free? And no one, I think, that who's rational thinks that is a reasonable thing to ask anybody to do.
Yes.
But that essentially, I mean, the rate was a market rate, but we didn't have any transparency. And so as a result, there's not a lot of change just because we're kind of negotiating ourselves right back into a very similar place. Is that fair to say?
It is fair. In stats, NAR put them out that commissions from the buyer side have actually gone up because they're holding ground on, I've gotten this agreement signed with my client that I'm going to be paid 3% because that is what I've negotiated with my client. But then I want the seller to pay that 3%. And so then it's very transparent. So if the seller comes back and says no, then everybody knows that either needs to be made up somewhere on your agreement or there needs to be a reworking of the contract or you walk.
Okay. So that's interesting. I mean, I guess in that case, are you seeing realtors that are better negotiators?
Yes.
Okay. So some of the inexperienced realtors then are probably getting weeded out of the market, which is probably what should have happened in the first place.
Probably. Yes. And they're the ones that are the first to say, okay, take my commission. I'll do it for 1%.
Okay. Desperate. Okay.
Yeah, I personally wouldn't want that agent working for me if they can't even negotiate for themselves.
No. Yeah, no. Probably not the person you want working with you.
Yeah.
In terms of, Zillow and Realtor.com and their valuation, I'm obviously setting you up for
Zestimates.
the Zestimates. Why do you think they're so off?
I don't know. It's an algorithm. It's the same when we run comps to list a property. We look at what has sold and what is the neighbor. It's all within a certain range, and I don't know how they're so off, but they are very badly off.
It seemed to be. It was almost a hobby of mine to look up property values, mm-hmm. and there was a good period of time that, and maybe it's just we didn't have this breadth of information yet, that they appeared to be pretty good. And I would probably go back to pre-COVID.
Sure.
And so I'm certain just how quickly the market moved resulted in their algorithm failing. And I know, they got into the investment game, Zillow specifically, and that worked miserably for them.
And and then the realtor game.
Yes.
They had their own agents.
Yes. Not a successful venture.
No.
But I am kind of amazed we've got a little bit more stability in the market and they still seem to be off.
They are very off. It's when I go to listing appointments and anybody has their Zestimate printed out, it's always like, okay.
We need to have this conversation.
And sometimes they're super high and sometimes they're super low. They're just, it's kind of all over the board.
So tell me how that conversation goes, because everybody does their own research. It's almost like going into a doctor too. Like, you've self-diagnosed yourself, but everybody is familiar. They believe they're familiar with what the value is of their home, and they sit down and they give you the piece of paper. Walk me through that conversation.
I can't make up numbers. Like, this is what things are selling for today. Usually I go back 3 months in that market. So it's literally looking at comps, looking at the condition of your house and location. So if you're trying to compare your home here to a home in Tampa, or vice versa, St. Pete versus Tampa, not the same. I love when people tell me like what their house is worth in Illinois. Like, oh yeah, okay. Well, that's always
an extreme.
Yeah.
We actually had one of the stories that, it was not a good story. It kind of talks about our lack of affordability and the market moving so quickly. We had hired someone that was relocating from Chicago that came down here. And after a good 2 weeks, said, I'm withdrawing my name because we can't replace what we have in Chicago for what's available down here. And that was an eye opener that, wow, we've got some affordability issues. And
I wonder if they had to be in a suburb.
I don't know where they lived.
I was going to say. Chicago's high.
Chicago was high. I don't think anyone will disagree with that, but that was a little shocking. Is that kind of usually the disconnect that people are saying? The comps aren't good? Because I would imagine they kind of look in their neighborhood first, right?
You have to look in the neighborhood, yes.
Branching out.
And there's you look at what's active too. So I just had a really nice sale that appraised, that comped out, that was a flooded home that they fixed up beautifully. It appraised, it comped, and other people in the neighborhood were ecstatic because that just increased their property that are in the same situations dramatically. And then you saw more homes pop on the market that next week because it's almost a waiting game too. Like, if there's some good comps that maybe are going to hit, is if they get their number, that's just going to increase everybody in that neighborhood.
So I can imagine, I know you kind of focus in the luxury space, but you sell all property types. What would you say is the differentiator between, someone who's looking for, a luxury waterfront property, a luxury condo property, someone that just wants kind of your average middle-class home? I'm sure amenities and that sort of thing, but what does that experience look like with the different buyer segments?
I would say the higher end homes require more time on the back end. Like, the more research, they don't want to, their time is precious, as is most everybody's, but they have very limited time to take a look at properties. So when they are going to go and look, it needs to be refined.
Very specific that this is what I'm looking for.
Very specific.
Don't waste my time.
This is the size of boat I have. Can I get back there? I need to be this close to the airport. I need to have a gym. I need to have all these things within X radius.
Okay.
So it needs
a lot
to be
more specific in there.
A lot more specific, a lot more dialed in. I would say, your everyday home buyer, let's say, median price is $425, but let's say an $800,000 buyer is going to look at maybe 20 homes. The $5 million buyer is maybe going to look at 4.
Okay. Now, are they actually going physically and looking at 20 homes?
Yes.
They are. Wow. That's exhausting.
Yeah. Well, and again, inventory is up, so there's 20 for them to look at.
Right. Yeah, for the first time in a while.
Yes, for the first time in a while. So it used to be a handful, but the difference is that really scaling it to what they need, and it's very precise.
And this is also a statement of the obvious, but I would imagine you alluded to a lot of cash buyers. A lot of cash buyers in the luxury space, while kind of the median income space, they're asking for financing, needing financing, having to work through that.
Of course. Yes. So the time to close is always a little bit longer with those because you have to do the appraisal and all of the financing requirements, whereas the cash buyers are just coming in pretty hard.
No.
And the same
Quick
on the
closing,
listing.
right?
So my luxury listings, I have one right now for $8 million. I'm getting about one showing a month, whereas I have an $850,000 listing and we're getting 5 a week. So it's just a different scale, different expectations.
When someone buys an $8 million home, to me that's fascinating. Obviously out of my price range, but to me, do you get what you want for $8 million? Do they go in and do a significant amount of renovations? I mean, for $8 million, I would think that, okay, you go buy something, you tear it down, you build your own.
For $8 million, they're getting everything that they want.
Okay. Yeah. Okay.
Depending on location.
All right. So what does a luxury buyer want, expect?
Space, high-end appliances. Obviously, pretty much at that price point, it's going to be waterfront, pool, privacy is big. The neighborhood is huge, whether it's a gated community or a luxury high-rise. I mean, it's
do they care about schools? Kids are probably going to private schools, right?
I would say at that price point, a lot of them don't. Their kids are grown.
Okay.
It's not a lot of families that have younger kids that are in school, but primarily, anything in the luxury market, yes, and it's a private school family.
Yeah. Julie, if people want to connect with you, they want you as a realtor, want to know more, I mean, where would you recommend they contact you at?
My mobile is the best. Call or text is good for me, 727-773-5592. I do have a website, julie-larsen.com, that has all of my contact information as well.
Well, Julie, thank you so much for coming on Money Market.
Thank you for having me. Appreciate it.
You can find the Money Market Podcast at the Bank of Tampa online and on YouTube, LinkedIn, Facebook, Instagram, and on X. Before you leave, make sure you like, follow, or subscribe. And until next time, we'll be sure to see you around in the Money Market.